Hey guys, and welcome to the Working Money channel. So Michael Van de Pope here saying the markets will go way higher than most people are expecting, and Bitcoin didn't top out. He's talking about the Bitcoin chart, of course, and the fact that many people think 69,000 was the top. So another analyst suggesting that Bitcoin has not seen its all-time high. And with the mounting evidence, all the indicators suggesting the same thing, Michael Van de Pope just also bringing up what I had brought up in yesterday's video. If you guys didn't catch yesterday's video, I will link it up here in the top right-hand corner. Honestly, it would make a lot of sense. This cycle is longer than the previous one. The 4-year cycles aren't happening anymore due to macroeconomic impacts. Therefore, this cycle will be higher and longer than everyone expects. And so he's just demonstrating that with this chart that I presented to you guys in yesterday's video, just suggesting that in this particular cycle, we have completed the first and second waves, yet the third and fourth waves of this trend upward have not been completed yet. And he correlates that to the realized cap hodl waves here, 1, 2, 3, 4. So we saw that in the first cycle, second cycle, third cycle. He's considering 2011 to be a first Bitcoin cycle, mini cycle. Then we saw one 2012, 2017, of course. And you can even see just by the dates here that the cycles are taking longer to complete. And so now in 2022, we have not completed the cycle yet. We are just on the first and second wave, and that is demonstrated down here. I talked about it in yesterday's video. Michael Van de Pope also noticing the same thing. That was originally retweeted out by BTC Fuel here on Twitter. And he's bringing up some other things. The parabolic phase starts when a new all-time high is reached. Then Bitcoin is all over the news. The amount of people that enter the market in a certain time frame increases. Bitcoin will then start moving in a channel with a steeper slope. So we haven't seen that yet. A new all-time high did occur, $69,000, but we did not see all that FOMO. We did not see the hoopla, so to speak. Bitcoin was in the news a little bit, but we were trading on low volume, still are trading on low volume. Bitcoin right now trading at $41,900 per coin, hovering in this level of support. We haven't seen too much movement. Low volume, of course, very different from the former bull runs. And, even one of the other things I wanted to mention here, just taking that that date range tool here in TradingView, taking it from the bottom of the bull run and marking it to the top here, only takes us to 1,060 days, if you guys can see that. And if these bull runs are indeed supposed to take longer, well, the bottom of the bear market in 2015 to the top of the bull run in 2017 brings us to about 1,068 days, if you guys can see that over there. So what does this mean, guys? I mean, to me, it doesn't seem like we have completed that bull rally. The bull rallies continue for longer periods of time. That has definitely been identified. And so $69,000 not trading on high volume whatsoever. And to this point here, we have not seen that parabolic rise. We also have not seen altcoins really rally in the meantime. Usually this is the point where altcoins rally, and we haven't seen that either. So I've got XRP up here on the daily, trading right now at about 75 cents. Again, nothing to write home about. Nothing exciting is really happening on the charts today. The Real Plan C here on Twitter is also bringing up the Bitcoin cycles, but from a different angle. We are entering stage 3 of the emotional roller coaster, resulting from a capitulation-driven extended consolidation phase. As long as Bitcoin stays above $40,000, I expect the third phase of this pattern to play out over the next 2 to 6 weeks. And so here's just a chart demonstrating what we saw back in the spring and into the summer. Panic, fear, and then hope. And so we're experiencing that right now, according to him. And so this all correlates to the 168-hour simple moving average. Panic, fear. Now we should be entering hope. And so just to bring that up again on the Bitcoin chart, if you were to consider this a bear market, a mini bear market here, which we did in fact see, it did retrace. We did see Bitcoin come back up to significant Fibonacci levels, like right up here, topped out at the 0.618, then bounced right back down at the 0.382, finally came up here, completed the full fib. Now it's ranging down and around here again at the 0.382. So just to put things into perspective, considering this, again, sorry, back to this, Considering this a bear market, mini bear market here, it would have taken us down about 56%. Then we rebounded back up. So that's all he's saying here. We could be approaching the sentiment of hope very, very soon. So some interesting perspectives here from Plan C. Also wanted to remind you guys, XRP_Crow, bringing this up, our airdropped solo tokens will be in our wallets in 2 days. That would be January the 20th. So if you're watching this video on the day that I'm releasing it, in 2 days, the final airdrop ratio is 0.004 solo per XRP. And if you guys already hold solo tokens, it's 1.24 solo per each solo token. And so Steedus has just created a useful infographic to that point here. If you guys were wondering, I will link this tweet also in the description if you guys want to refer back to that. We got some Ripple partner news here, guys, with regards to Airwallex. They say they plan to increase headcount from nearly 100 to over 150 by the end of the year amid a European expansion. So SME banking provider Airwallex says that it has a big year ahead. No doubt, 2022 is going to be huge for a lot of these payment providers serving SMEs or small to medium-sized enterprises after recruiting executives who previously worked at Derivalu and Revolut amid European expansion plans. In November last year, Airwallex announced an additional $100 million in funding following a $200 million funding round 2 months before. The additional funding upped the value from a $4 billion valuation to $5.5 billion. So Airwallex Ripple enabled, looking to expand in Europe. Of course, this is the way the XRPL inadvertently is going to expand with more utility running through the XRPL. XRP going to gain more traction, therefore be in more demand. The network will grow larger, and more demand for XRP means a higher value is needed in order to conduct these transactions. Now, maybe not for some of the smaller transactions, but of course, once bigger companies are going to want to transact in larger amounts. We heard it from David Schwartz, right? The XRP price has to be a high amount in order to fulfill these requests, because if XRP is worth $1 and the payment they want to make is $1 million, well, you need 1 million XRP. But if XRP is worth $100, you would only need 10,000 XRP to make that same transaction. So sourcing 10,000 XRP, obviously a lot easier than sourcing 1 million XRP. Did I do that math right? 10,000 times 100. Yeah, 1 million. But anyway, back to this. Airwallex, of course, expanding in Europe. They've made some new hires, and talking about those new hires, Jed Rose, general manager of EMEA Airwallex, told AltFi the pair had a deep understanding of the fintech and startup ecosystem that are vital to the growth and the success of our business. Rose added that Airwallex, which was founded by 4 friends at Melbourne University, was looking to grow headcount from nearly 100 to over 150 by the end of the year. He added, "We currently have over 35 open roles and are recruiting at all levels of management as we continue to rapidly grow our teams to support the significant increase in demand from business customers across Europe." So Airwallex expanding, great news there. Wanted to keep moving, guys. The Cryptic Poet posted this with regards to another Ripple partner. This has to do with Nium. Ripple partner Nium teams up with Al Mulla exchange to improve global payment options. Brought to us by prnewswire.com, the partnership will enhance Al Mulla exchange payment experience globally for both corporate and individual customers. Global payments and card issuer Nium announced today that they have agreed on a partnership with Al Mulla Exchange, a member of Al Mulla Group and Kuwait's leading remittance and exchange company, to enhance the operation of transfers for Al Mulla Exchange clients to key markets and regions globally. Of course, this is in the Middle East, and we know Ripple has a strong foothold in the Middle East. Al Mulla Exchange retail and corporate customers will benefit from enhanced remittance and payment services to nations across the world in the respective local currency at very competitive FX rates as a result of this partnership. So of course, providing that liquidity through XRP, definitely not going to be a problem. It's fast, efficient, and cheap, as we all know. Customers will be able to access these services through the company's network of over 100 branches and kiosks located at selected locations in Kuwait, as well as via the online website and mobile application. Al Mulla Exchange app was named one of the top fintech apps in the Middle East by Forbes Middle East and was ranked the #1 remittance application in Kuwait and the 3rd in the MENA region in 2020. So, building in popularity, of course, Nium will enable Al Mulla Exchange to provide their customers with seamless B2B, B2P, P2P, and P2B cross-border payments in all major currencies. And of course, again, why wouldn't they be able to do this? Considering RippleNet utilizing XRP sources for that liquidity and is indeed primed to perform these types of transactions. Access to multiple real-time payment corridors. Again, another thing that Ripple does really, really well. Instant speedy settlements to customers. Again, pointing to RippleNet there, and competitive FX rates. If you're conducting these transfers in 3 to 4 seconds, obviously you're not going to be prone to the volatility of FX currency, similar to if you'd have to wait 5 to 10 business days for these same transactions to go through. So all these 4 bullet points here just pointing to how efficient RippleNet is. Of course, we know Nium is RippleNet enabled, so I'm not surprised about that. And the Cryptic Poet just here mentioning Nium began leveraging Ripple's advanced blockchain technology to process transactions in real time. This from an older article. I know Nium has been partnered with Ripple for a while now. Anyway, wanted to thank the Cryptic Poet for posting that. Some US regulation news, guys. Michael at Val5 links. The OCC chief calls for collaboration of federal entities in crypto regulation. So the OCC, head of the OCC is Michael Hsu, and the OCC is saying that federal authorities must cooperate in order to properly regulate the crypto industry. Now, I recently did a video with Chris Giancarlo commenting a bit of an out-of-the-box opinion on how cryptocurrency regulatory framework should be handled in the United States and what body should be taking care of it. If you guys didn't see that video, I'll link it up here in the top right-hand corner. But here's what Michael Hsu had to say. He says the risks create a need for multi-agency collaboration as no single entity is able to accurately regulate them. A bit of a different approach from Chris Giancarlo. And so here is the quote. Large crypto intermediaries today may have multiple subsidiaries subject to different regulators, but no one regulator is able to understand how the firm as a whole operates, how much risk it is taking, and whether it is operating in a safe, sound, and fair manner. As large crypto intermediaries expand, engage in a wider range of activities and risk-taking, and deepen their interconnectedness with the traditional financial system, the risks from the lack of comprehensive consolidated supervision will increase, as will the need for interagency collaboration and coordination. Hsu points to the previous initiatives of interagency cooperation in order to regulate the digital asset market. Last year, the OCC teamed up with the Federal Reserve and the Federal Deposit Insurance Corporation, or FDIC, to focus on bank-related crypto policies. Of course, he's choosing those two as an example, but we all know how much the SEC wants to be able to regulate cryptocurrencies. And, the CFTC, the SEC, two different regulatory bodies that could share this responsibility. I'm not entirely sure if they want to share that responsibility or if one of them wants 100% of the cryptocurrency space. But anyway, to Hsu's point here, the interagency team developed a common vocabulary, identified key risks relating to crypto activity engagement by banks, and laid out a roadmap for areas and activities where supervisory clarity is most warranted. At the top of the list is crypto custody, which, like stablecoins, is foundational to crypto operating at scale safely. While banks and trust companies have a long and successful history of custodying and safeguarding assets, the technology underlying crypto and the associated governance with certain tokens present a host of novel issues warranting careful analysis and consideration. So again, with this interagency dependence to be able to regulate cryptocurrencies safely, blah, 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 for the investor, yada, yada, yada. I mean, I get their point. I understand that, they got one kick at the can here and they want to do it right. They do not want to screw this up. But at the same time, they are inadvertently stifling innovation in the United States, right? The US could be leaps and bounds ahead right now, but they're falling behind China and falling behind other nations now looking into cryptocurrency adoption. Obviously, CBDCs are a big point right now where central banks around the world are conducting experiments and seeing, okay, what works here, what works there. China's already released their CBDC and going to be rolling it out at the Beijing Olympics. So much is going on, and the government has been being criticized by Congress and many different people saying, we cannot fall behind China. This is not going to be good for our crypto policy. We do not want to play second fiddle to China when it comes to this new and emerging technology. So some interesting points here. This approach actually sounds like it's going to be more red tape than it's worth. And so I urge you guys to watch that video I did with Chris Giancarlo talking about his approach and how he imagines cryptocurrency regulatory clarity evolving in the United States as the years go on. It's an interesting perspective, I gotta say. The other thing I wanted to mention too, cryptocurrency regulatory clarity is the linchpin, and Ripple and XRP are at the center of this. Yes, they're at the center of this as we speak. They're in court, as you guys know, and there's this question, are they going to settle this thing? Do they want to settle this thing? Is it a bad thing if they settle this thing? Do they go to the end? Is that better than settling? There's all these questions here. Could it be that maybe since this lawsuit has dragged out for so long at this point, that Ripple just wants to get on with things, and maybe time now is not on their side. And so maybe, whereas before Brad Garlinghouse said, he made that statement on Twitter saying, Chris and I, we could have settled this separately, but no, we're going to take it full on, full steam ahead. We're going to stick with Ripple, and we are going to fight this to the end. Now, that was back in December of 2020. Them's fighting words. But, a lot has changed since then, and, maybe because this has been dragged on for so long, maybe things have changed with regards to Ripple's defense, what their lawyers are thinking about the case. And so could this now possibly be the approach that they want to take? I saw this from Stéphane Hubert here, worth repeating. Ripple agrees that Hinman's speech was his personal opinion. So there's also the Hinman speech here that we recently got a verdict on, which could have changed their mind. He goes on to say that's settled. What reason could Ripple have to agree with the SEC if this strengthens the fair notice but weakens the not a security defense? Why would Ripple settle this if not for a settlement? So this is the official statement that Ripple's lawyers put out. The question of whether Hinman's speech reflected his own opinion or the agency's is settled. That point there, I think, speaks volumes because they are not fighting that. They are not saying that, no, hold on a second. Here is some more evidence to suggest that his opinion was that of the SEC's. And, we're all thinking, why? Why would they be doing this when it's clear? I mean, the XRP sleuths in the space have brought up a lot of great information to suggest otherwise. Why is it that they are now stating this in this document on the record? William Carr down here saying, not sure I understand your last two sentences. Stéphane Hubert reiterating, what reason could Ripple have to agree with the SEC if this strengthens their fair notice but weakens the not a security defense? And William Carr says, so it weakens the security defense? Stéphane says, yes. Ripple could have simply insisted that it was the SEC's opinion. As we all know, there's enough evidence to prove that. If Hinman's speech was the official position, Ripple could simply point to the speech and compare XRP to Ethereum. However, Ripple cannot do this anymore. William Carr responding, gotcha. I think Jeremy Hogan said he felt the debate whether XRP was a security/crypto was a much stronger defense for Ripple than the FND, the fair notice defense. I feel good about it then. And Stéphane Hubert saying, I can't judge that. But what I can judge is that Ripple certainly wouldn't have agreed to this if they were of the same opinion as Jeremy. So, I mean, everything in a lawsuit is strategic. Could Ripple have agreed to this to pursue another avenue, to perhaps settle this sooner because now they're realizing they're at the end of the road. This has been going on for way too long, and they are perhaps cutting their losses, so to speak. The defense team thinking to themselves, maybe we should just settle this. Then you can get on with business. You can and will be able to usurp China with RippleNet technology, of course, a faster, cheaper, far superior technology, the one that is going to be utilized globally. Ripple would not be partnered with so many central banks if that were not the case, let alone the World Economic Forum. Guys, think about it. So is this strategic to save time? Many different questions still looming overhead, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.